Hi, everyone. Welcome to the market update. Now, this guy right here is not our usual lender. We're going to try something new. We're going to have some different people on here. We'll have some other lenders, have CPAs, whoever it might be. Today, we are lucky to have Erik Sandstrom. Doesn't only work California. He works basically most states, huh, Erik?
Yeah, pretty much throw a dart on the map, and if you hit it, I can do it there.
Oh my gosh, man. Well, the insight we're gonna get off of this. How does the San Diego market compare to like other markets that you've been seeing?
Well, it's different. I'd say it's, of course, as far as price point, it's up there. I don't get a lot of the $1 million loan amounts in, let's say, Georgia or North
Yeah.
Carolina or states like that. But I'm seeing a lot of similarity in regards to what's going on in the market throughout the entire nation. So what we've got going on here, I don't think is much different in many other states.
Well, before we get into rates and kind of how they're looking, I'm going to put and remind everyone below. You'll see the ticker right there. That's how the market's sitting right now. The market hasn't really changed that much with inventory, at least out in San Diego. It might be different in other states, but right now, I mean, we're closely talking about 2 weeks of inventory. But if you can take a look at below, I mean, right here, pending properties 3 million to 700,000 is 1,400. Or actually, active properties under 700,000. There's only 423. Pending properties under 700,000 is 1,143. So you're talking about that's roughly, if all most of those pending properties go sold, you're talking about a little over a week and a half of inventory in that market, right? Across the board, we're probably talking about 2 weeks of inventory. We've been sitting about 2 weeks of inventory for as long as we've been talking here. Yeah, low inventory. And we've been talking so for a while how rates have been so low in the twos, which that's a thing of the past. Erik, why don't you bring us some of the bad news about what rates are sitting right now?
Yeah, so it's not all sunshine and rainbows in the lending business. I'll tell you that. We were spoiled for a good 2.5 years with the rates in the twos, and I'd say about a good 2 months ago they started creeping up and creeping up and creeping up. They went into the threes. We thought they were going to come back down. They really didn't. They kind of hovered around that. And then this past week, we had the Fed meeting that occurred. And what everybody was expecting was the Feds to basically say, we're going to push back any rate hikes that are going to occur starting in March. Unfortunately, they didn't. So they basically said that the rate hike in March is imminent, but the ones in the future, so let's say the ones at future dates, they may push back. So that caused, instantly a 0.25% rate hike in a matter of a couple hours of that Fed meeting. So we've seen now rates starting to go in the fours.
Wow, in the four. Oh my gosh.
Which is still good, though. We really
Well,
can't
relative.
complain about it.
I mean, I still remember when people were talking about and when people were saying, "Oh, fives aren't too bad." I mean, in my day, we were talking about 11%. Now, I
Right?
don't remember personally 11% or 9%. I do remember 5%, and I might be one of those people that's talking down the road because we might get into lower rates in the future. But 5% relative, it's not that bad. So at least for 4. So all right, I'll give you it.
Just 3 years ago, I bought my house at 4.375, and I work for the bank, right? So, that goes to show.
Well, all right, Erik, think about one of the exciting new programs we have right there. When we get to you, before we get to you, we're going to do question time. People love coming here, the chance to win $50. You can text below. There's my number and Erik's number right there. Win your chance to win $50. Now, here was the question for the last time. How much is the most expensive detached property sell at Alphas? Actually, no, that was yes. How much of the most expensive detached property selling in El Cajon so far this year? The answer was 1.4 million, a little over 1.4 million. All right. Now we're going to switch it up. We're going to stay in El Cajon, but how much does the least expensive detached property sell in El Cajon so far this year? All right. So we gave you a reference point a little over 1.4, but now we're talking about the least expensive. So it's probably going to be less than 1.4 would be my guess if I was a betting man. All right. You want to throw out any guesses there, Erik?
Me? Oh man, the least expensive. And are we talking properties that are bought cash that may be flip
You know
types?
what? I don't want to narrow people down to this idea. It probably would be kind of cash, my guess, but it could be
Okay.
just the least expensive that we've seen on the MLS so far this year.
Oh, 375.
All right, so that's what Eric's going. What are you going to do? Text below. You'll see in the clicker right there. Text your answer. Now, the question I brought up a little while ago, Eric. What's an exciting program that Prime Lending is offering this year? Something that maybe is a little unique, maybe compared to other lenders. Anything that kind of pops to your head?
A ton of things.
Okay,
I'll go with one.
All right.
And that's something we launched recently, actually, just about a week ago, a program that goes up to 105% of the value of the home. So instead of going through a traditional down payment assistance like CalHFA that has income limits, we just launched one that does not have income limits. And it's kind of cool. It's a regular FHA first lien. And then the second lien is the assistance. So it's still the 3.5% down FHA, but you get all the assistance provided by the second lien holder that's not CalHFA. It's kind of cool. So the repayment period, if you choose a 10-year repayment, the interest rate is 0. And if you choose a 30-year repayment, the interest rate is 5% on the amount that you're getting. So if you don't have any money for a down payment, this program just launched. I really want to get somebody in as a TBD underwrite. I don't want to send anybody shopping yet. We can hold off on that. I want to make sure all
What's
I's
TBD?
are dotted.
If people, what does that mean?
So I think that's important in most cases when you're making an offer on a house. I mean, what we do as a lender or as a loan officer is we gather information, right? And then we put it into a system. And then we push this little button that's Fannie Mae or Freddie Mac or FHA, and that tells us whether or not we can do a loan. But that's not a human behind it. So there's an underwriter that would verify all the information that I put in and then make sure that we're going to follow through with the loan. So when you do something like that, you can submit an offer with a 21-day close of escrow, sometimes even less, versus, let's say, 30 days, which, I mean, you may know more. It's probably pretty difficult to get offers accepted right now, and you have to have every edge you can.
Yeah, I mean, it's definitely interesting, and you're probably working a little backwards on it because you live in San Diego, but you work in other states. When I work with some lenders that work in other states but are doing a loan in San Diego, they always go, "Oh, don't worry, we could do if we need to do it fast, we could do 30 days, yeah, right?" And I'm like, "Whoa, in San Diego, that's not really that fast. I mean, that's kind of like kind of slow, you know what I mean? It's a different mindset that some other states have compared to how I think the baseline that we have in San Diego.
Oh, 100%. I mean, you see people saying we can't close in 60 days in Georgia, right? When you've got the whole good old California loan officer, we're moving fast, right? We don't mess around. We want things done quick. So,
is there any state that it's hard for you to close too quick?
No, not really. I mean, pretty much it's all dependent upon the borrower. You know, if we've got a responsive borrower that's going to send us everything we need and fast, that's what it takes. States really aren't specific in regards to timelines and stuff like that.
So that's just basically a BS answer when you're dealing with another lender from a different state. It's more of them just being relaxed.
100%.
Right,
yeah,
well,
it's or lazy. You can use that word too.
Well, fair enough. I mean, any last words of wisdom for anybody listening right now that's kind of curious about getting a loan, refinance, anything like that?
Don't wait. Rates are going to go up. They're going to and continue to go up. So I would suggest, especially if you're going to buy a second home, rates are going to skyrocket for those. I mean, really anything. You know, selling your house right now, it's a good time. And buying. If you're going to buy it and live in the house, there's never a bad time to buy. That's what I always say. So
if you can afford, it's something that I've talked about multiple times in here. If you can afford the monthly payments, then go ahead. if you can't afford the monthly payments and you're just going to buy it because you're hoping the equity is going to take you to a next adventure in about 6 months, a year, 2 years, please hold off on purchasing. Hold off on purchasing. Focus on the monthly payments. But one last piece of advice I really have to give is